Hello friends, this is PhillipCapital India and I'm going to share the weekly technical commodities outlook report for the 5th of August to 9th of August 2024. If we see the last week gold future charts, we can figure out that post sharp fall of almost 10% a week before, we have witnessed a bounce back last week and gold ended up 3% at around 70,255 levels. So as per the charts, we can see that it has a very strong support at around 67,000 mark. That's a cluster support. And that was tested a week before. From those levels, we have seen pullback. And going forward, we believe that 70,500 to 72,000, this will be a strong immediate supply zone for gold futures. So any pullback toward this zone is expected to witness some kind of fresh selling pressure in days to come. Contra trading long should be looked only on dips towards 68,000 and lower levels, but any move towards 71,000 to 72,000 level can be looked for fresh trading short bets. So the crucial levels for the coming week for gold futures will be at 70,500 and the major 71,200 to 72,000 zone, which is a strong immediate hurdle for the counter, which can be looked for contra trading shorts, maintaining strict stop losses over and above 72,000 mark. So going forward, we believe that the counter can end up into being into a range between 67,000 and 72,000 with a silver line at around 68,750 over and above which the downside should be capped. If we talk about silver, last week it ended marginally up 1% at 82,493 mark. So we can see here on the charts that it has a very strong support zone between 80,000 to 78,000 mark. That was a previous hurdle which we have seen a breakout in early March 2024, and thereafter it tested the highs of 97,500 before slipping down a week before. So going forward, this zone of 80,000, 78,000 mark should be looked as a very strong support zone, and it will be a good risk reward ratio for going long, at least for on a delivery time frame. While on the higher end, the immediate hurdle for a week and two will be at around 86,000 mark, followed by higher extended level of 92,000 mark. So initially, as per the price study and the structure, one should look for buying on dips and sell on rise. The crucial levels for this week will be 80,000 and 86,000 on the higher end. So dips towards 80,500 to 80,000 can provide a better risk reward ratio for going long, keeping the stop below 80,000 mark on closing basis, and pull back towards 86,000 can be looked for contra trading shorts. If we talk about crude oil, it ended down 5% last week. It ended at 86146 mark, and as we can see here on the charts, the broader triangular pattern continues to remain active, and there we have seen that the immediate resistance was close to around 7,200 mark, which was tested in July, and from those levels it has encountered profit taking and slipped down once again. So going forward, we believe that the index, this counter will remain under pressure till the time it is trading below 7,200 zone. But on the lower end, we can see that it has a decent support at around 5,800 and major trending support at around 5,500 mark. So that support can witness fresh buying interest. So going forward for the coming week, the bias will be sell on rise. Immediate hurdle will be at around 6,500 mark. The support will be at around 5,800 mark, followed by 5,450, which can be looked for contra trading long bets, keeping strict stop loss of not more than 100 odd points. So overall, for first few trading sessions of this week, 5,800 and 6,500 can be looked as a trading zone with buy on dip and sell on rise with strict stop losses. If we talk about copper, it has also ended marginally in green last week from the crucial support of around 780 mark. Once again, copper has bounced back and it ended last week marginally in green at 795 levels. But overall, the structure is not that bullish on a short-term time frame basis. We believe that copper can continue to consolidate within a range of 740 and 840 with buy on dip and sell on rise outlook. For the coming week, copper 767.55 will be the first important support where one can look for buying, keeping stop below 750, while any kind of pullback towards 815 to 825 zone can be looked for contra trading short bets, keeping strict stop loss of 15 odd points. So ratio spreads can be initiated at around these levels if one want to take a conservative trading bets. That's all from my end. If you find the content relevant and if you want to receive our trading ideas and strategies, you can contact us on this given mail ID and contact details for the coming week. Thank you very much. Have a great time.